The Fed Chair Powell, is he the Grinch that stole Christmas, or do we still have new highs ahead in the stock market? Hi, my name is Blake Morrow with Forex Analytix, and you're listening to the Week Ahead video, and I'm going to talk about that. I'm going to talk about a few other things, a couple of the key charts that I think we need to be paying attention to going into this next week. Now, it is a holiday week. It's Hanukkah and Christmas actually fall on the same day. So whatever holiday you happen to be celebrating, I hope you have a Merry Christmas or Happy Holidays. And thank you so much for always being here and listening in to this show every single week. I appreciate you. All right, now before I continue on, I do want to mention that if you are not aware, the Forex Analytix pricing, holiday pricing, you got buy 1 month, get 1 month free, 40% off on all semi-annual subscriptions. Now, we've never done that price before, so this is going to be something new for you guys. We've only offered 40% on annual subscription, so take advantage of it. And then also you'll notice that all trader funding program holiday offers, till the 1st is going to be 30% off. Make sure you use that discount code. You can get that with the trader funding program. Okay. Now that I got all that out of the way, let's talk about some of these markets that I think are very important. Like I said, next week, there's a few things that are happening. Actually, let's talk about that. And you can follow along with Forex Analytix. You can follow along on your calendar over here to the right. You can follow along with some of the charts that I'm going to go through. We covered more than just currencies. We cover the dollar index, S&P. You can see obviously gold right now, and there's a lot of other things that we're covering. On Forex Analytix, it's 30 different instruments. So make sure you guys take a look at everything that we do and all the different analysis that's on here. All right. Monday we have Canadian GDP. So just keep in mind, if you are in Canada, you're gonna get a read on month-over-month Canadian GDP numbers. But on Christmas Day, Ueda is speaking, and he's meeting the counselors of Kidiren in Tokyo. I believe I pronounced that correctly. Regardless, it's going to be a very, very important meeting, because he actually sometimes, from what I've understood, he actually can make a policy change there, and that's going to be on Christmas Day. So just keep that in mind. Markets will not be able to trade, but he could say something that could really move the yen. And then Thursday of next week, we have unemployment claims, in the U.S. And there's other little bits and pieces of data, but not a lot. But I want to show you just some of the key developments that we've seen this week. We've seen this amazing move in the dollar. And I don't know, I have the Kiwi up right now. Let me pull up the dollar. Oops. I'm going to pull up our charts that we look at here. Those updated ones, those ones I use all week long in the Forex Analytix platform. For those of you that are Forex Analytix subscribers, you know that. But what we've seen in the dollar is we've seen a move to new highs, and then we have this bearish outside day that's developing. Now, I know it's Friday. We just had the PCE data that came in weaker than expected, so the dollar is obviously under pressure. But one of the things about this move is that we created a new high and then a reversal. Now, next week is going to be a pretty important week from a price action standpoint, because we might have done a bearish outside week, which could in turn maybe force the hand of some people that are looking to sell dollars into year end, play that out. So that bearish outside, bearish outside day, I didn't mean bearish outside week, bearish outside day candle has developed. And that's something that I think you all should be paying attention to. Now, what I'm really concerned with as far as the dollar goes is going to be channel support, which comes in around 107.11. That's going to be really key. But what you've seen is this big reversal in the euro. And we were talking about the euro, consolidating. We got slammed after the Fed, and the euro could not take out this 103.50. There are a lot of calls. I mean, when I say a lot of calls, I'm talking a lot of banks are very, very, and rightfully so, they're very bearish the euro. They are calling for parity, and it does feel like that's happening. The only problem that I see right now is that U.S. data has continued to be strong, but what if that changes? Can it change the trajectory of the dollar overall? Yes, I think so, because we've been running on dollar exceptionalism. The market is really long of dollars right now, so the positioning, I think, is kind of poor. So you got to watch this euro. If the euro gets back, much above 105 or 105.30, you can see that resistance right there. I would be really careful with the euro. And the problem that we're going to have moving forward for the next couple of days or the next couple of weeks is we're going to have this end of month and end of year flows. And if it's dominated by dollar selling, we could end up seeing, the euro dollar a little bit higher. And could we really end up putting in a higher low and going the other direction? Now, overall, I think the euro economy continues to be weak, and it doesn't show, the divergence between what the European Central Bank is doing and what the Fed is doing are completely different, especially after this week where the Fed really, gave us a hawkish cut. And when they gave us that hawkish cut, the euro, slumped. And that was pretty intense, pretty big how that happened. But that reversal that we've seen there, that's something that needs to warrants some attention. Now, my opinion would be if we get a rally towards 106 at the end of the year, that might be better levels to be selling euro if you still expect a weaker euro. But right now, it does look a little dangerous for anybody who is short euros at the moment. And as you can see, we're at a really key inflection point. Let me go over here to. Remember this spike low? This is when we thought, the euro actually did fill the gap after the French news. Well, the euro's probing these really key levels right now at the end of the week. Now, what's also another big deal, in my opinion, is sterling. Take a look at this chart. We've been looking at this and how we've been talking about how big this 125 level was. Now, we did have the Bank of England rate decision, and you can see the sterling sold off following that, but you notice how we're holding well above 125 going into the end of the week. Now, this is a very big trend line that we've been talking about. So again, pretty key levels there that we need to be looking at. One of the other big developments that I wanted to talk about, the US dollar, Japanese yen. Now, the BOJ could not have been more dovish, and that was got the US dollar, Japanese yen well above this 157 level, and then notice how we're putting in potentially a false breakout. Again, these are things that I think should have your attention as a trader, that we're seeing some pretty big reversals from some key levels that is worth noting. Also, we should talk about the S&P. We had and I told you we would. We had the S&P break out of this ascending wedge, and we broke down. Now we're on the potentially at the going to deal with a government shutdown right now. And with a government shutdown, should stocks be rallying back this much? I'm not too sure. And we rally back basically to previous underside of this trend line. And my 2 cents is, is a top end in the S&P? Potentially. And remember, there's a lot of optimism going into this next year with President Trump coming in for his second term. Now, is that already played out? Are people going to be looking to sell on rallies now? I think while we're below this trend line, you have to be very, very cautious about the stock market at this stage in the game. A couple of other things I wanted to, before I go any further, what I do want to do is I want to actually let Nick come in from Trading Analytix. He's going to talk. He wants to give you a little. He might talk the markets, but I know he wants to give you a holiday wish. So here's Nick.
Hi everybody, this is Nick Groves. Blake, thanks so much for passing it over to me. First and foremost, I just want to say Merry Christmas everybody, and thank you so much for the support you've shown us this year. It's really appreciated, and I'm looking forward to the next year with you guys because I think it's going to be a fun one. But I'll give you guys a couple things to chew on over Christmas. Looks at the moment that the S&P is bouncing off this 38.2 of this range from the lows of September. Also a false breakdown of this channel. So are we going to see a breakout? It's possible for sure. Santa Claus rally, are we going to get it? We'll talk about that. But I will give a bearish setup as well for the S&P. You can see here from this wedge that we broke down, we're rejecting right now perfectly off this trendline resistance, former support. That's also right near the 618. So, I think we could potentially stay lower. Looking at the Dow, though, the Dow also put in a false breakdown. Get under a little bit of pressure right now. Kind of needs to hold right where it's at, but we'll have to see. And looking at the NASDAQ, it had a false breakout, led to a breakdown, but as you can see, it's right back in this formation again. We'll leave you guys with this stat here. If you buy the NASDAQ composite 3 trading sessions before Christmas, which is today, and sell X days later, you can see the best win ratio is selling after 8 days. So will this ring true? It has a 28-5 win ratio. So I could see a scenario where we keep climbing, but I'm going to try and kick my feet up over the holiday and enjoy my time with my friends and family. I hope you are all able to do the same. And once again, thank you so much for everything this year. And I will see you guys all next year. Cheers.
All right. Thanks, Nick. We appreciate the holiday wishes. And, like I said, I wanted to cover just a couple other markets quickly for you. And then we're going to review the 3 trades from last week. And I'm really not going to give you 3 trades for this next week. Because it's going to be end of year. There's going to be some, flows coming through the market. So I want you to be just extra cautious. But we will review what we talked about last week. So another thing that I think we should be looking at right now is gold. Gold actually sold off, hit channel support here and held it. So holding that channel support is pretty key as far as gold goes. Now, if we break through the lows from this week, that's going to be a bearish event if you're talking about gold. And then I will talk about copper here in a few minutes. But before I do that, actually, let's talk about the 10-year. So the 10-year notes market, we broke through this trend line. You can see how we broke through that trend line, and now we're retesting that trend line. Now, if we break the underside, so in other words, if this breaks to the upside here, you're going to get a squeeze, and you can see we've already got a bit of a false breakdown at the moment. We're going to get a squeeze, and that means dollar weakness is to come. So that's something else that if you are trading the dollar, be really aware if the bond market catches a bid, because if that happens, that means yields are under pressure, and the dollar is going to rally even further. Okay, I'm going to take a moment and I'm going to go over the 3 trade setups of last week. And like I said, I'm not going to give you 3 trade setups of this week because it's the end of year. I just want to say you just have to be very careful with the end of year flows and just whatever is happening. There might not be a rhyme or a reason to the move. So just be extra careful, if you will. All right, so let's talk about the 3 trades that we talked about last week. So I said channel resistance in the Aussie, you buy it above. Well, guess what? The Aussie actually went straight down. I mean, the Aussie just got killed. The dollar came under pressure, or the dollar rallied. The Aussie actually, and I need to actually do this here. You'll see that. See, I think what we're doing is we're actually creating a different channel that looks more like this. So is that something that we need to worry about right now? No, but take a look at this. So in other words, the trade didn't happen. Take a look at how important these levels of support are as we approach them, right? We're getting down towards some really, really critical levels in the Aussie. And I would argue, that if the Aussie can close the day or the week back above 62.70, which we're about 10 pips away from, that would bode well for a little bit of a false breakdown in the Aussie. Now that shouldn't matter too much into next week, but it might, especially if we have some dollar selling flows coming in. All right, so the next setup, the second setup that I talked about last week, euro dollar above 105.30. Back to 106. Well, that didn't happen. We didn't even get close to that. Matter of fact, the euro came under pressure this week. I was really hoping we'd get above 105.30. Just didn't happen. But like I mentioned to you guys earlier, the thing about the euro is it's holding these levels. And, it doesn't matter how bad the macro environment is in the euro, it's still holding up well. And that should get your attention. It doesn't mean that you should be buying the euro per se, but if things turn worse in the US in the months ahead, I think we need to be paying very close attention to how the euro is acting down at these levels. And last but not least, the third trade setup from last week is buy Bitcoin at 95,500, right? 95. Oh, here's the channel. There's the channel we were talking about. Buy at 95,500, and then and well above 95,000, sell it at 100,000. So yeah, if you were selling it at 100,000, what I was basically saying is trading the range. So if you sold it above 100,000, great. Now we dipped all the way down to 92,200, 300. And we're trying to hold up right now. And that's pretty impressive for Bitcoin. Now, this channel is not in existence anymore, or at least it's broken. So I don't think it's going to be tradable, but maybe we have to look at it more as a sideways range now in Bitcoin that looks something like this versus an ascending channel. I think there's still a lot of interest in Bitcoin, and there's going to be buyers at least, as President Trump is inaugurated. So I think that is something that we need to be, adherent to and just aware of. And I think below 92,000 it turns bearish. But while we're above now that lows from this week, I think we got to respect the fact that it's holding. All right, guys and gals. Well, I hope you all have a happy holiday season. I want to thank you for being here each and every week and spending time with myself and the rest of the crew here at Forex Analytix. So on behalf of Forex Analytix and everybody here, happy holidays to all of you. I'll catch you next week on the Week Ahead video. Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.